Hey, welcome back. Getting back with some more stocks for you to look into. I'm trying to keep them short and diversified and give you just enough to maybe get an idea and look into them yourself. Everything is value, but I'll try to give you some commodities, some dividends, maybe some growth, so you can research whatever is interesting for you. Again, this is kind of a taste of what you can see on Seeking Alpha, where I put like 2 of these a day. Especially now with a Black Friday campaign, it's probably the cheapest you'll ever get it. At the end of the day, you pay less than $1 a day, and if you get a single good idea per year and all the research and data and everything you get from it can definitely be worth it. Now, Getty Realty, this one is a real estate investment trust that I really like and have been buying recently with a focus on convenience, car washes and stuff like that. They are making quite a lot of money given the market cap and currently pay around a 7% dividend per year. The financials are overall solid for a REIT and they are keeping the leverage at a manageable amount, but even better, there is no maturity until June 2028. So they have more than enough time to wait for the Fed to continue cutting and potentially get even better interest when refinancing. But sure, you have the environment with the government shutdown, the tariffs, whatever, and ultimately, even if the Fed continues to cut the rates, that's not going to be instantly beneficial. But you know, at the end of the day, even with some tenant bankruptcy in early 2025, they have like a 99.8% occupancy, so nearly perfect. The payout is at like 80% and it's overall a solid company to look into. To me, this is more about a stock that's pretty much trapped in a bad and pessimistic environment, even if the company is investing and the industry remains pretty solid, even if it depends on discretionary budgets, and I can easily see something like 40 or even more. Not to mention that they went through a massive tenant bankruptcy before and they are totally fine now and investing, diversifying and so on. Then we have Diamondback Energy. This is a pure play Permian oil company. For a roughly 40 billion market cap, we see exceptional cash flows like 4.7 billion year to date. They can make a ton of money even with oil at like 50. They have that, but it's spread over many years and with a weighted average maturity of 12 years and quite a bit of liquidity. They had a pretty big acquisition recently and also did some divestitures recently and freed up a lot of cash. As a result, despite the lower oil prices, they increased the production per share, lowered the costs and very importantly, increased the adjusted free cash flow per share by about 15% year over year. Even with oil at like 60 and a bit of growth, I think this is easily worth like double the current level. But sure, it's an oil company, so it's going to be very volatile because it depends on the environment, politics, wars and so on. Still, even with that, I think this is very good value. And I like the management being focused on dividends, buybacks, debt repayments and also paying attention to the environment and potential opportunities. And after all, it's a good quality Permian oil company trading at like a 6-7 price to free cash flow ratio, so not bad. By the way, if you want to support the channel and see when I buy anything or even get a custom stock analysis or even 2 each month, check out the Patreon link below. Now, Abercrombie and Fitch, this is an apparel company that actually has significant value behind it. Sure, by default you have near-term issues from tariffs and economic dependency, but they have premium brands targeting millennials and Gen Z and younger adults and the fundamentals are very good. They depend a lot on the Americas, but similar to Lululemon, that also means there is significant potential to grow internationally. Even with the estimated 90 million impact from tariffs, they still increase the guidance. And the very interesting part is that they have a 12 to 13% buyback yield and a new buyback program for nearly 40% of the market cap. Financially, we see an overall very good position with the current assets covering the current liabilities and almost half of the non-current liabilities. I think this definitely has good chances of being bought by a giant like L'Oreal, and even with a conservative valuation, this should easily be worth over 100. I know it's fashion and apparel and that can change overnight, but even compared to peers, this is way too cheap to ignore. Especially with the buybacks and the value behind it, if things improve improve in the macro environment, it's very hard to see the market ignore it or some company not trying to buy them. Again, everything is from Seeking Alpha, you can get a discount using the link below. Again, look into it, it's definitely worth it in my opinion, especially with the Black Friday discount that's on for about a month, and you also get a 7-day free trial and support the channel a lot. As always, what I cover in my videos shouldn't be enough for you to make any investment decisions, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out, and make sure to subscribe. Thank you for watching, and I'll see you next time.